If you are currently paying off a bond, you might want to sit closer, because up next we chat to property lawyer Meyer de Waal, who'll be sharing some ideas on how you can literally save hundreds of thousands of rands in interest on your home loan. Meyer, welcome to All About Property.
Thanks, Cornelius.
Now, how do banks determine the interest rate that they charge on a home loan? Because it differs from bank to bank and from customer to customer.
So the banks have to work in an insurance policy for them, we can call it, by adding 1 or 2 or sometimes 3% on top of the interest rate. The reason why they do that is to build in for risk. Now, the risk can be anything where they grant a home loan that's 100% home loan, and then they say, well, there's maybe a risk that the person can default. And because of that, they will add 1 or 2%. For good customers, they can even reduce it, prime less 0.25 or prime less 0.5. So it all depends on the quality of the customer, because there are a couple of elements that add to the granting of a home loan. Number one is your security that you offer, and they call it loan to value. The second one is your income. If you are actually borrowing right up to the top of your income level, then there's always a margin for error if the interest rates goes up, and then you are going to struggle to keep your head above the water. And the third one is your credit profile. If your credit profile shows a little bit of late payments or non-payment, then a bank will say your propensity is not so good. And propensity means that you actually have the money, but you kind of sometimes not focused on paying the accounts on date and on time. And that's why the banks will add 1 or 2% on top of prime interest rate.
So Meyer, let's look at an example. Let's say, for instance, someone has got a R1 million home loan, which is borrowed to him at prime +2. What is the extra amount that you would be paying over a 20-year period?
We did a calculation, and it comes down to roughly 320,000 Rand. Now that is basically 1/3 of your home loan extra that you pay.
Sure, that's on top of the R1 million that the bank
exactly. So that's added on top of your bond plus interest. 1/3 of your bond, you're going to pay extra.
Now, let's look at if that same customer who took out the R1 million bond or home loan, if he had to pay just 1% less over that 20-year period, what would that amount be?
You can halve that 320, and that comes down to 160,000 Rand. It's still quite a huge amount, 16% more on your home loan for 1%.
So just with the 1% difference, there's about 150,000 Rand saving over the 20-year period on a R1 million bond.
160,000 Rand, yeah. So that's a saving that you actually have.
Now, Meyer, you have some ideas of how people can save on this interest rate that they're paying. The first is where people can renegotiate the interest rate on their existing bond. Talk to us about that.
Go ahead with your property transaction, get the bond registered, but now prepare yourself for 1 year later, maybe 2 years later, because you want to go back to the same bank and you want to ask the bank and renegotiate a better interest rate with a bank.
So when you go and renegotiate a better interest rate with the bank, what do you physically do? Do you call up the home loans department and say, I want a better interest rate on my home loan?
Exactly, but you have to do that well prepared. You have to be much fitter. You have to have a better credit score. Hopefully your salary has increased. And the third one, definitely your property value may have increased. So these are the 3 ingredients for a home loan: your credit rating, your loan to value, and your income. So if these items or these components have increased and improved, I can't see why you cannot demand that the bank must improve your interest rate and reduce your interest rate, because you as a customer has proved to them, I'm a loyal customer, I've paid my bond every month, and your security now has increased quite a lot. So let's renegotiate this interest rate. And my view is that the bank, you must challenge the bank. You must actually go out there, because otherwise you're actually trapped in the 20-year bond repayment, and you are sitting there blissfully unaware that you're paying 32% more for your home loan.
Now, I think people forget that they are actually the clients. So And that brings me to your next point. You're also saying if your bank does not want to renegotiate your interest rate, you can switch to another bank.
It's up to you as a customer to go to actually the individual bank and ask your bank, can I get a better interest rate? And if a bank gives you a bill, then I would say go to a different bank. Because we even find that a bank that you've banked for the last 30 years or 20 years would not give you quite often the best interest rate. It's quite strange, but you would expect your bank to bend over backwards to accommodate you as a mortgage loan as well. So go out to different banks and ask the bank, if I come to you as a new customer, what interest rate would you charge me? Here's my property, this is the valuation of my property, here's my credit score, and this is my income.
And also this is the interest rate that the current bank is charging me.
I don't think you need to disclose to them. You just say, I would like to switch to another bank. Now, if you look at the banks, they've got fierce competition out, switch to this bank, switch to that bank. So they're constantly looking for new clients, but you cannot do that through one of the mortgage origination companies.
Now, when you switch your home loan to another bank, do you have to re-register that bond?
Yes, indeed. And
so there's obviously lawyer's fees.
Exactly. So there are lawyer's fees and expenses, but you've got to be well aware of these expenses. Now you weigh up the expenses of paying another lawyer the fees. You've also got to look at the cancellation fees, and you also got to look at notifying your existing bank 3 months in advance. Otherwise, they charge an extra early termination penalty fee as well. So if you know about these extra expenses, you give notice in advance for the termination, then your 3-month period will run out. The next one, you're going to pay about R3,500 for the cancellation of a bond. That is to the attorneys attending to the cancellation of your existing bond. And on a R1 million bond, you can expect to pay about R25,000. Now, if you look at the R28,000 as a combined expense versus the savings that you will get over a 20-year period, for me, it's a no-brainer to pay a little bit more now. Maybe you can even incorporate that for R28,000 into the new capital of a home loan, and that it doesn't cost you any capital outlay. But compare the expense versus the saving that you will have, and most likely you'll be very well surprised.
Now, this is great news for a lot of people. But obviously, as you alluded to earlier, you have to have your ducks in a row before you go and negotiate with a bank to lower the interest rate or switch to another bank. Just summarize again for us, what is it that we need to have ready before we take this step?
Well, Cornelius, just as you are preparing yourself for the first home loan, credit rating, affordability, and your income, and again your scorecard. So make sure that from the day that you actually get approved for a home loan, do not go out on a spending spree. Do not go and buy a lot of stuff on credit, because the credit purchases and applications will damage your credit score. It will downgrade your credit score. For example, on a credit card, if you are always maxed out on your credit card, these items will actually downgrade your credit score. We heard a lot about downgrading in South Africa, but this is actually what's happening to your credit score. So protect your credit score like glass. It's easy to break, it's not easy to repair. That stays in your credit profile for almost 2 years. So make sure that you pay off debt. Make sure that, obviously, if you can get salary increases, it will help a lot. But then also look after your property, that your property value can increase. So those are exactly the same criteria that you would have had before you applied, but make sure you do not go on a sliding down scale, actually improve, and then you can actually demand a better interest rate a year or 2 years later.
Well, Meyer, thank you so much for your time. It was lovely chatting to you.
Been a great pleasure. Thank you.